Welcome back to Market Day Report. Well, we're getting to the finish line, and let's see how these markets are doing. I think you're going to be pretty happy with this quote board, especially when it comes to corn. The trend is up. March corn, 454.5, up 3/4, inching our way towards the high there at that 455 mark. July, 465. We talked about that a little bit earlier with my friend, Mr. Jim McCormick. They had some offers up there to get some corn sold out into the future. 465 target order did hit, up 1.25. Looking at December 2025, 441 struggling. Looks like this demand rally is front end led. Let's see how soybeans are doing. Last time I checked, they were a little lower. Jan soybeans down 5 3/4. Jan options expired today. Watch that 980 handle, folks, as we come into the closing hour and a half, last 90 minutes a day, as people are jockeying for those what's called strike prices. The 980 strike is in play here. January options expire here in 90 minutes. March soybeans, 991.25, down 6. We still have a 10 handle in May. That makes you feel good, but is it worth keeping those soybeans all the way to May? What are we waiting for? Basis improvement, futures rally, something, but operating notes will need to be renewed, and we're going to have to go to the bank and explain to the banker how we're going to make all this cash flow. Border trade wheat, 546.5, up 5.5. A nice rally here today in Chicago wheat. It didn't start that way, but it's staying that way. Hard red wheat is next. March hard red wheat, 555.25, up 3 3/4. 555. We have a 6 handle, folks, in December hard red wheat. That's nice to see. December hard red wheat, $6.25, up 3.5. A little late Christmas gift here in the wheat. Up to North Dakota, Minnesota, and our good folks in Canada we go. Spring wheat country. Brought bagels in the office. I talked to the baker. I said, I bet you this wheat is high gluten wheat flour. He said, yes, he buys Pillsbury wheat. I said, I think I know the people who grew that. March spring wheat, 596.25, up 2 1/4. Good looking wheat board here. All right, last but not least, and then we'll bring them in. Cotton, up 4 ticks. Cotton, by far, the slowest commodity I've looked at today. Nothing much to talk about. 68, 69, $70 handle across the board. Let's bring him in. Mr. Chris Swift, a Nashville favorite. He could almost hit a golf ball and hit him. Chris Swift, welcome to the show.
Thank you, Tommy. Good morning to you.
Good morning, sir. What are you seeing in the grain trade?
You know, Tommy, we're watching July corn. July corn is sitting here at 465, within 3/4 of a cent of the October 2nd high, which was the highest from contract low. If it breaks out above here, we're a little bit concerned for our cattle feeders. Not only are they paying 10 to 12% higher for feeder cattle in the last 4 months, they're also paying an elevated price for fuel. Interest rates have soared the last 4 months, and the last thing we want to see them have to do is pay higher corn prices. So what we have been on an agenda to try to do is fix some of these variable costs out there. We're already dealing with really expensive cattle prices now. We've got to feed them something. There takes several markets that we trade that helps to produce those cattle and those beef, and corn being the number one, because we're about the only country out there that has corn-fed beef.
That's interesting. Let's talk, since you brought it up. I got to keep asking you. I talked to a client in North Dakota today, and he said he's going to bring corn to the ethanol mill and then bring back DDGs. What are you seeing in the DDG market?
You know, not a lot, because all of that hinges upon ethanol alone. So they trade it as a protein portion, not necessarily off of the same price of the corn, but is priced as a protein. I don't think you're going to see much of that unless we see a large increase in crude oil prices. We are kind of expecting energy prices to firm as we go forward into the new year, even with the president saying we're going to try to knock down, we're going to let them drill, we're going to open up all kinds of aspects for energy production. But yet, that still is only us. That doesn't include the whole world of what they may or may not do. So again, fixing some of these input costs that we know we're going to have, and corn, DDGs, anything that has to do with energy and corn, they're going to be a combined market for quite a while now.
You stay right there, Mr. Chris Swift, Swift Commodities. We're going to be back with Market Day Report, take a little commercial break, and we're going to talk something he loves to talk about, cattle with Chris Swift. Right there. Welcome back to Market Day Report. You want to talk cattle? We got a cattle expert on the line, Mr. Chris Swift. But first, let me quote it up. We'll go quick, because I know that old boy. He can talk a bit, so we'll go through these quotes quick. Him and I are going to argue who gets to talk first. Live cattle, December, 193.12, up 35. We're going to waste no time. I'm a man of my word. Feeder cattle, Jan feeders, 259.70, up 40. Going to the back end of the feeders, March, April, May, August, all down about 25 ticks. Nothing to get worried about after that up 450 day. And Chris loves cattle, but every once in a while he'll have a little ham. February, lean hogs, 84.20 going back to the back months. June, 101.85, hovering there, up 30. Bring them in. Let's not waste any time. We have a cattle expert on the phone, Mr. Chris Swift, Swift Trading Company. I read your newsletter. Thank you, sir. Keep up the good work. Educate us.
All right. Tommy, right now we are dealing with too much production and packing capacity for the number of animals that we have available. An animal is something that we all take care of, and so that's what we look at is when we want that animal to take care of, if there's fewer of them out there, we're going to have to fight to see who gets to take care of them, and we are probably in the next 1 to 3 years of that event taking place to see who really wants to be in the cattle business as we continually contract. We form vertically integrated lines of supply chains on there, and probably most of all, we continue to experience efficiency. With the dairy beef cross, the efficiency of producing that beef is so much more significant than when you look at the wide range of cattle out amongst the having to deal with the winter weather, having to deal with large expanses to go and get those animals. And I understand the land is cheap out there for that, but still the efficiency of all of it and the capability of fewer people being able to manage more cattle. That's been the view of everything going forward that we have seen in most any major industry. It is all consolidated to where it only takes a few to be able to do a lot of business. I think the same thing in cattle production.
You know, Chris, let me ask you something. I'm taking you down a little rabbit hole here. I was at a cattle auction a few months ago, and I said, why are those going so cheap? He said, those are baloney bulls. I mean, all the animals are coming to the market. If there's anything even remotely not perfect with this cattle, they're taking them right to market and getting a pretty hefty price. Is that correct, Chris?
Absolutely, it is, and we look at the difference between the lean trimmings and the fat to make the grind. The hamburger meat is what is in the greatest demand right now, has been, and so that's where that particular cow comes in at, the cutters, boners, canners, those particular ones where we get a lot of our lean trimmings off of and have to mix with a lot of the fat that comes off of the big fed cattle.
You're making me hungry for a steak. Mr. Chris Swift, Swift Trading Company, good to see you. And one of my first friends I met here in Nashville. Thank you very much, Chris, for jumping on with us today at Market Day. I'm going to hand it back to the lovely Suzanne.